Welcome to Bears in Exile. Today is October 22nd, and this is the weekend market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, my week is finally over, and I hope to return to the regularly scheduled program going forward, and we shall see. Just like the market, right? We shall see. So, what do we have? Well, here we have the action on Friday. Big, huge green bar, really nice, and all kinds of things to drive it. We had options expiration. We had the celebration in Libya. We had the end of the Iraq War, the possible end of the Afghanistan War, and we had the hope that there's going to be some kind of agreement on the euro over the weekend, even though it's already been split into two, and the second part is this next week. So, with all of that being said, we have the short-term moving averages pointing up. We did say over the last couple videos that it was looking better and better for the bulls, and they had the advantage, certainly, that played out on Friday. Absolutely. Broke out of the previous high. We're coming in on the 200-day moving average with everything pointing up. Up on the CCI, getting to overbought. Up on the slow stochastic, already overbought. Fast stochastic, almost overbought. 14-day RSI moving average, which we've been watching, closing in on overbought, but still has room to move. Overbought on the RSI. Uptick on the histogram, breaking the downslope. Uptick on the MACD. Very strong, very, very powerful. And so, really good for the bulls. Absolutely, absolutely. This is massively bullish, massively. Can't be understated. And it was on decent volume. It wasn't on huge volume, but it was on decent volume, more than decent actually. And it was green volume. Now looking at the 60-minute, we've been saying that there are divergences in play. And how did all of this affect that? Well, we have intraday negative divergence. We have long-term negative divergence. We have really, really long-term negative divergence. And stochastics, yeah, we have intraday divergence. We have, let's see here. I'm going to blow it way, way up to see what kind of other divergence we have. And yeah, we have long-term negative divergence in the stochastic. We have long-term negative divergence in the RSI, long-term negative divergence in the MACD histogram. So, the bears still do have that. And someday, that will play out. And what day that'll be, who knows. If we could figure that out, we'd all be rich already. But the point being, yes, this is extremely bullish. Yes, this could run further. And yes, it has problems. SPX, more of the same, broke out of the previous high. Nice super green candle coming in on the 200-day moving average. We're having some cross in the middle Bollinger Band. We are above the upper price consensus level. And the secondaries, for the most part, are all the same as the Dow. And so are the divergences. Long-term divergence in the CCI, in the stochastic, in the RSI, in the MACD. I do think this is going to bite somebody in the rear. And that's what I think. Now, could all of this reach up and break the divergences? Yes, it is possible. But there it is. There it is. The VIX, not quite as inverse as it should be. It is still above 30. It is still below the lower price consensus level. We are getting cross on the middle Bollinger Band, getting below the, attempting to get below the short-term moving averages, and downtick on the CCI, the fast stochastic, side tick on the slow stochastic, 14-day RSI moving average getting into oversold by a good amount. Oversold on the RSI, another downtick on the histogram, downtick on the MACD. So it does not look good for the VIX, but that's okay. And what can we infer from all of this? Well, certainly there's room to move down in the stochastics. Yeah, they could go down, meet the 14-day RSI moving average, and then wait for their curl back up. Whether or not that will break the 200-day moving average is unknown at this time, but it's certainly possible. The movement of the short-term moving averages going through the bullish bar is looks very nice for the bulls. It is collapsing. It is bouncing off from the interior of the bar. It's very nice. The bulls should be rejoicing at this point, and that looks very strong. 60-minute though, what do we have? We have the 14-day RSI moving average hooking down. Ooh, not good for the VIX bulls. Stochastics getting low. Everything pointing down. A lot of things already, like the CCI getting oversold, but regardless, looks good for the bulls. Now, do we have positive divergences? Well, we have long-term positive divergence in the CCI. We have medium-term divergence in the stochastics. We have a good bit of divergence in the RSI and very long-term in the MACD. So when are these going to play out? Well, we don't know. So at some point it will. TNA, nice little miniature hammer. I've been saying that it is not so attractive as it is not doing significant damage to the bar yet, although it is damaging it. Did close above the upper price consensus level. We still have the middle Bollinger Band below the short-term moving averages. These are all good signs for the bulls. Uptick on the CCI, not yet too overbought. Another uptick on the slow stochastic, fast stochastic, 14-day RSI moving average. Overbought on the RSI, and another uptick breaking the down slope to the MACD histogram. Not good for the bears. Not good. 60-minute looking for divergence. Negative divergence in the CCI. Negative divergence in the stochastics. Negative divergence in the RSI. Negative divergence in the MACD histogram. You see a trend here. Now, to put this into perspective, because I'm like a broken record tonight, have all these divergences, and the bulls are going to say, oh, we're just going to keep going because it should go down. And there is a lot of truth to that, absolutely. Here's GE. Now, GE normally tells the true direction of the market. You'll see that it is not some big, giant green candle. Yes, it did break out to a new high just a few days ago, but now it is with the spinning top, and some of the short-term moving averages are pointing down. Which isn't to say that this one's just going to collapse and take the Dow with it. What it is a possible precursor to what the Dow should do, and that is not making a new high today. You'll notice on GE, the downslope of the MACD histogram has not been broken. You'll notice that the MACD is getting a slight downtick. You'll notice that the 14-day RSI moving average is already really high, and the stochastics are pointing down along with the CCI, and the RSI is overbought. So, to me, this is a warning sign to go along with the negative divergences. Now, this could just break out, go up to the 200-day moving average. It's entirely possible, but I guess we're going to see what happens. And UUP have a little inverse hammer. Um, it is below the lower price consensus level once again, and it is below the 200-day moving average once again. This is a major break, absolutely. It should not be minimized. Short-term moving average is pointing down, middle Bollinger Band above them. CCI pointing down, almost oversold. 14-day RSI moving average, we've been tracking this whole time, and we did not get that move in the stochastics to go up and meet it like we were expecting. Now the fast has gone up to meet it, but it just met up with it and continued down. So, very unusual that the slow stochastic would remain down here for so long, just stuck. So that is a surprise. Absolutely, that's a surprise. RSI, very oversold. Downtick on the MACD histogram, downtick on MACD. And certainly, at first glance, this does not look good for the dollar. As a matter of fact, every single time period from a guppy perspective looks poor as it breaks down from the bar. And we do have positive divergence all over the place, but this is news driven. You know, maybe the war ending, maybe the Euro banks hoarding euros is to blame for this. Who knows? But the fact is, at the moment, it is not attractive. So we're just going to call it as we see it and say while it should be going up, it is in fact going down for whatever reason. And accept that for the moment, but I don't accept it for the long term. I don't even accept it for the intermediate term, but in the short term, it is what it is. FXE hammer, right at the top of the range, made a new recent high, and I have been absolutely baffled by the strength in the euro, getting up to the 1.39s. It should be in the 1.35s, but it's going to do what it's going to do for now. Uptick on CCI, almost at overbought once again. Very high on the slow stochastic, 14-day RSI moving average, and fast stochastic getting up there. Very high on the RSI, uptick on the MACD histogram, uptick on the MACD. And yes, we have negative divergence in the euro, and so this market here is just amazing. We even have intraday divergence in the 60-minute. Just crazy. GLD, our second VIX, little pop-up, miniature spinning top, not attractive, still essentially a double flat line, and ticking down on the histogram, down on the RSI, slide up on the MACD, 14-day RSI moving average very low, waiting for the stochastics to go down and meet it, uptick on the CCI. And lastly, SLV. And a little bit of a pop-up, little doji star. 14-day RSI moving average already peaking out from oversold levels. Side tick on the RSI, down tick on both stochastics. Uptick slightly, massively slightly. Yeah, you could even call it sideways on the histogram. Uptick on the MACD. And we still favor this a little bit over gold. Still have that room between it and the bar for a bar retest. And there it is. Not exactly what I was expecting, but that's okay. It doesn't have to be perfect. Sure would be nice if it was. And of course, all eyes are on Euroland and the proposed bailout, as well as the possibility of QE3 showing up to join Operation Twist. So this next week will be very interesting, and if we get a decisive break over the 200-day moving average, then yes, absolutely, the bears are finished. So be very, very interested in what happens at that level. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.